So for this session, we will talk about your estate tax. So for estate tax, generally, we will discuss your estate tax first by knowing your inclusions, what are included inside your estate tax, what are excluded on your estate tax, and after your inclusions and exclusions, we need to determine what are your deductions to your estate tax because this is a type of tax wherein we need to get for your net taxes. We need to get for your net taxes. So first, we need to define what is an estate tax. An estate tax is imposed on the right to transfer property by debt. You already know that if ever the transfer is affected by debt, that is succession subject to estate tax. It is levied on the decedent's estate and not on the heir receiving the property. Take note, who pays the tax is the estate. Okay? So you already know what is an estate. An estate is the property left by the decedent. Therefore, when we transfer properties to the heirs, whatever is the estate tax, it will be removed from the estate. The estate tax will be removed from the estate. Are we clear? So the person or the one who pays the estate tax is the estate. Okay? It is the estate. So estate tax, you already know this is the tax on the right to transfer your property at debt and on certain transfers which are subject to estate tax. So one controlling factor so that we can subject an item to estate tax is that it is because of debt or in contemplation of debt. Later, we will discuss what is debt, what is in contemplation of debt. Further, it is a tax imposed on your right or privilege, which is the shifting of the benefits and enjoyment of the property from the decedent to your heir, which is a living person. Okay? So your heir should only be a living person. Sir, can a decedent also succeed? Not anymore. So hindi pwedeng patay to patay. Okay? Hindi pwedeng patay to patay, kailangan patay to buhay. Because the property should pass on to another person who can make use or enjoy that property. So if that is already a dead person, of course, he cannot already enjoy the property. Okay. So how do we compute your estate tax? I told you your computation of your estate tax is at net. So how do we compute gross estate less deductions will give you your net estate. Your gross estate, what we need to learn here are the inclusions on your gross estate and what are to be excluded on your gross estate. So what is a gross estate? A gross estate are the property owned by decedent at the time of death, including stocks, bonds, real estate, mortgages, and any other property that technically belong to him at the time of his death. So in short, any other property or any property that should be owned by your decedent at the time of his death is known as your gross estate. So what are your inclusions on your gross estate? So we need to know these situs so that we need to know what items are included. So on your gross estate, we have either your resident or citizen. So when we talk about your resident or citizen, this can be resident alien for resident. For citizen, this can either be a resident citizen or a non-resident citizen. So again, when we talk about your resident or citizen, this can either be resident alien, resident citizen, or non-resident citizen. And only different rules on your non-resident alien. Okay? Resident alien, resident citizen, non-resident citizen, we have here same rules. And then non-resident alien, we have here a different rule. So for your resident citizen or resident alien or non-resident citizen, we have these different property types. So we have your real properties, tangible personal properties, and then intangible personal properties. So resident alien, resident citizen, non-resident citizen, you include within or without because the taxation here is global. The taxation here is global. Take note, all properties, whether it is located outside the Philippines or located within the Philippines, for resident alien, resident citizen, and non-resident citizen, we include it as part of your gross estate. How about your gross estate for your non-resident alien? For your gross estate for non-resident alien, what we include only is your within. What we include only for your non-resident alien is within. We exclude your outside the Philippines. So you only include as part of your gross estate for your non-resident alien Philippines. So the rule is for non-resident alien only on the properties in the Philippines. Other persons, global. Right? Non-resident alien, properties only inside the Philippines or within the Philippines. Other persons such as your resident alien, resident citizen, and non-resident citizen, global. But for your non-resident alien, on intangibles located in the Philippines, it is subject to reciprocity. Therefore, for intangibles, we have this certain rule. It is subject to reciprocity. Meaning, if it is based on reciprocity, we need to exclude it. If not, we include it. Okay? So if there is a reciprocity, what do we mean by reciprocity again? This is a agreement. This is an agreement between two countries wherein they will not tax a particular item. So for example, intangible personal properties, so your intangibles, if ever there is a reciprocity between that non-resident alien, you should exclude it. Again, non-resident alien. If there is an intangible located in the Philippines, it is subject to reciprocity rule. So if it's within the reciprocity rule, you should exclude it. But if not, then include it. So what are your intangible properties? So you already know what is a real property. You already know what is a personal property. Of course, your real properties are your properties which cannot be moved or are immovable. While your personal properties are generally your movable properties. And your movable properties can either be tangible or intangible. So in your taxation, we need to determine or define what is an intangible personal property. So intangible personal property, how do we define an intangible personal property? Intangible personal properties under your taxation are your financial assets and your intangible assets. So what are your financial assets? Your financial assets are your cash, your currencies, your investments, your receivables. These are all financial assets. Your intangible assets are your patent, trademark, franchise. So those are examples of intangible assets. Sir, why do we say that your cash, your investments, and your receivables are intangible properties? Because under the law or under the tax law, intangible properties means these are properties or these are movable properties that cannot be touched. So your receivables, of course, you cannot touch that. Okay. So although it is a personal property, of course, you cannot touch that. Investments, you cannot touch that. Sir, our investments, we have your debt certificate or your debt certificate, your bond certificate or debt indenture. You may say that that can be touched. Actually, those are only a representation of the item. They are not actually the item. So actually, the item cannot be touched and the papers are only representation, such as your cash. Your money are based on the value. Money are based or your monies are based on your values. Therefore, the currencies that we have right now, so the peso bills and your coins, are mere representation of the value of a money. Okay, they are mere representations. They are not. They cannot be touched. So the value of your money cannot be touched. Your receivable cannot be touched. your investments cannot be touched, although they are represented. Okay? So, general rule, items of your intangible properties are your financial assets and your intangible assets. How about your intangibles considered within the Philippines? So, what intangibles are considered within the Philippines or originate from the Philippines? Because it's hard, right? So, if you have an investment, can we say it is in the Philippines or inside, or it is without? Right? Is it inside or outside? So when can we say it is inside the Philippines? Your intangibles can be said to be inside the Philippines if the following are present. First, your franchise, if ever it is exercisable in the Philippines. Meaning, if the franchise can be used here in the Philippines, then it is considered to be an intangible within the Philippines. Another, your shares, obligations, and bonds. Your shares, obligations, and bonds are known as your financial assets. They are known as your financial assets. So when can we say that these shares, obligations, or bonds are considered within the Philippines? First, if it is issued by a domestic corporation. What is a domestic corporation again? A corporation incorporated within the Philippines. So if ever that particular corporation or a domestic corporation issued shares, obligation, or bonds, it is still considered within the Philippines. Because again, uh, the person who issued here the shares, obligation, or bonds is within the Philippines. Another, if shares, obligation, or bonds that is issued by any foreign corporation and 85% of the business of which is in the Philippines. So foreign corporation, but 85% of the business is within the Philippines. We consider that particular share, obligation, or bond as intangibles within the Philippines. Another intangible which is within the Philippines, it's a share, obligation, or bond issued by a foreign corporation if such shares, obligations, or bonds have acquired business in the Philippines. Okay? So what is the rule here? There must be an acquisition of a business here in the Philippines. Another, if there is an 85% business in the Philippines, they are considered to be within the Philippines. Okay? First, if ever it is domestic. Second, foreign corporations, 85% doing business in the Philippines, or it acquired business here in the Philippines. Lastly, any share or rights in any partnership, business, or industry established in the Philippines. So if ever that particular business is established in the Philippines, that particular intangible is considered within the Philippines. So take note, when can we consider the intangible within the Philippines? If ever it is made or done here in the Philippines. So as you can see, the domestic corporation or established in the Philippines or exercisable here in the Philippines. Another, if it's doing business in the Philippines and 85% of the business is within the Philippines, or it acquired a particular business already here in the Philippines. Take note of this rule, okay? Intangible properties are your financial assets or intangible assets. So please do not forget that rule under our taxation. We go now to your valuation of gross estate. Before we go with your inclusions and your exclusions, of course, we need to know the value of the item we include on your gross estate. So how should we value the item that we include in your gross estate? So general rule, the fair market value at the time of death. So for example, you have here a lot, okay, lot, namatay ka. Whatever is the fair market value at the time of your death, then that is the value of your gross estate. The fair market value at the time of your death, that is the value of your gross estate. So that is the general rule. But also we have your different or specific rules. We have your specific rules on your real property, specific rules on your shares not listed or traded, or your shares listed or traded, your notes receivable, or your bonds receivable, or your loans receivable, or any receivable. Also your usufruct, uses, habitation, or annuity. So your usufruct or annuities. We have specific rules that is applicable to them. So again, general rule, FMV. Whatever is the fair market value at the time of the debt, that is the amount of our item included in our valuation of estate. But we also have these specific rules. So specific valuation rules. So what are the different specific valuation rules? First, we have your real property. For real property, how do we value it? It is the higher between the assets or zonal value. It is the higher between the assets or zonal value. So we compare the zonal valuation and the ZES valuation, whichever is higher, that is the amount of your real property. Next, shares of stock. For shares of stock, take note, we need to look whether it is listed or not listed. If it's listed, it is the mean between the highest and lowest quotation at the time of death or near death. Not listed, this is your book value. First, for your listed. When we talk about your mean between your highest and lowest quotation, for example, you have here a particular investment in Jollibee. You have 20,000 shares. Okay, so let's say the highest amount is 80 and the lowest amount is 40. So what we do when we say mean, so highest plus lowest divided by 2. So 80 plus 40 divided by 2, we have here 60. That is the mean. Next, we have your not listed. For not listed, we get your book value. So your shareholders' equity at book value divided by your total outstanding shares. Okay? So this is like your book value per share. So your shareholders' equity at book value divided by your total outstanding shares. For your notes, if ever we have a notes receivable, a loans receivable, or a bond receivable, how do we measure it? We measure it at face value plus interest. Face value plus interest. So for example, we have 10%, 100,000 notes on January 1, 2021. You died on September 1, 2021. So you will add the interest, 100,000 plus the interest, which is 10% of 100,000. January 1 till September, January, February, March, April, May, June, July, August. So we have 8 months. Okay? That is the amount of your notes, your bonds, or your loans. Next, we have your usufruct. Your usufruct or your gratuities or your annuities. So when we say usufruct, you are granted the right to use the particular property, right of use and fruits. Okay? Usufruct means you have the right to use and the right to the fruits of a particular property. So you need to determine how long will you still get that particular usufruct or your annuity. You already know what is an annuity. That is an annual payment. Okay? So gratuity or annuity, annual payment to the particular person who died, and your usufruct, the right to use and the right over the fruits of the property that is enjoyed by the person who died. So how do we compute for that valuation? We use the present value based on life. Okay. Again, as a general rule, how do we value your gross estate? Based on fair market value, except on the following items: real property, shares of stock, notes, and your usufruct. For real property, it is the higher between your assets or zonal value. For shares of stock, that is your mean between the highest and the lowest quotation. And for your notes, that is your face plus your interest. For your usufruct, that is your present value based on life. Based on life. Okay? Once we know how to value already the items of our gross estate, we also determine what should be added to your gross estate. So additions to your gross estate or your inclusions to your gross estate. So what are your additions or inclusions to your gross estate? So these are properties which are not physically located in the estate at the date of death, but are still to be included as part of the gross estate of the decedent. because there are certain properties that you know you can already include. Okay, so for example, you know that the dissident has a real property, so you include that. The dissident has a bank account, you include that. Okay, so those are additions to gross estate. But there are also items that we don't really know if we will include it or not. So we will talk on those properties. So those are properties not physically located in the state. So you know that they are not really part of the state, or they are not known to be part of the state but should be included. Okay? So these are known as your additions or inclusions to your gross estate. So in your gross estate, remember what we need to determine here is what should be included and what should be excluded. So under your inclusions a while back, we talked about your general situs rule that for resident citizen, non-resident citizen, and resident alien, you include all. So global estate. While for non-resident alien, you only include those properties within the Philippines. But some items under your inclusions are really determinable, and also some items cannot be determined outrightly. So we need to know what are these other items that should be added or included in your estate, but it's not outrightly determined. Okay? So what can be included still, but not can be outrightly determined. So just take note under your gross estate, after we determine what should be included and excluded, please do not forget our valuation rules. So we have your general rule and your specific rule. We go now to your different inclusions. So the first inclusions or additions to gross estate that we need to discuss is your decedent's interest accrued at the date of death. So this one is any value of an interest in property or rights accrued in favor of the decedent on or before his death, which have been received only after his death. So any interest in property or rights accrued to your decedent. So what are some examples of this? So for example, we have here a dividend. We have a dividend that is already declared before his death, but this was only received after his death. Okay? So the value of that particular dividend, although you will only receive it after his death, but during his death, you already have the right to receive that dividend. We should include that. Okay? So as you can see, this is another item that we don't know that exists, but actually pertains to the dissident. Okay? That's one example. Another, we have your partnership profit. Okay? So partnership profit earned before his death, even if not distributed, because of course, before his death, he has the right to share on that particular partnership profit. Okay? Another, your accrued rent, which can be which is earned before his death, but collected only after death. Okay? So as you can see, another property which is already owned at the time of death of the decedent, however, not particularly determinable. Because unlike other properties such as your real properties, intangible personal properties, tangible personal properties, you can easily determine those items. But this type of item is not readily undeterminable. So please do not forget to add them. So decedent's interest accrued at the date of death. So dividend, if it's already declared before his death, even if it is given or paid after his death, then you include that. Another example, partnership profit before his death. So if the partnership earned profit before his death, whatever is the profit before his death should be shared to him. After that, of course, he will not already share. Next, your any rent income earned before his death, but you can only collect it after his death. So any accrued items. You already know that some interests, such as your accrued interest on loans, we include them, right? Because on your loans, notes, or your bonds, what is the measurement? Face amount plus interest. We directly include them. But some items, we do not directly include them, such as your dividend, partnership profit, and your accrued rent. So those are just some examples. Another addition to your gross estate is your transfer in contemplation of debt. So, what is a transfer in contemplation of debt? So, these are properties not physically available in the estate at the time of death because the decedent transferred them during his lifetime in anticipation of death. So, here you already know. So, for example, a decedent already knows that he is nearing his death. So since he is nearing his death, what he do is he transfers some of his properties already during his lifetime. So here, during lifetime, he transfer his property. But what is the consideration here? It is still the debt. Okay. So at the time of death, that particular property transferred during his lifetime was not already included. But again, you know that this particular transfer of property is in contemplation of death. So the main reason why you transferred a property is death. So again, take note, while he's still living, the decedent transferred his property to another person, but it is intended to take effect because of his death. So the main reason is death. So since the main reason is death, it should be included on your gross estate. Another, if ever by gift you intend to take effect after death or during death, that is still transfer if transfer in contemplation of death. Okay, so if ever there is any or donation, transfer or donation, and it will take effect because of death, it is considered transfer in contemplation of death. And what is the effect of a transfer in contemplation of death? We should add it on our gross estate. Okay, we should add it on our gross estate. Next, addition to gross estate is a revocable transfer. What is a revocable transfer? Revocable transfer are properties transferred with retention or reservation of rights over the property by the donor or the transferor while he still lives. Okay. So when we say there is a revocable transfer, anytime you transfer a particular property, however, it is subject to your revocation. So for example, you have a donation, this is considered revocable. And then you already died. Okay? Since it is revocable, anytime you can revoke that, but you already died. Who owns that property? Since you can still revoke that, that property is effectively owned again by the estate or by the decedent. Okay? It's still effectively owned by the decedent because, again, the transferor has reserved the power to alter or amend or reserve the right or revoke the property while he still lives. Okay? So any revocable transfer can be included in your gross estate. Next, property passing under GPA. So what is GPA? GPA is your general power of appointment. So what is this property passing under GPA? It is the right to designate by will or deed the person or persons who are to receive certain properties from the state of a prior decedent. So there is a prior decedent here. So prior decedent. So let's say tatay mo. Ayan. And then this is the anak. This is the new dissident. So the prior dissident has given the right to the anak to transfer certain properties. Okay, sabi nga dyan, you have the right based on the prior dissident to transfer certain properties. Okay, so if ever here prior dissident the prior decedent has a will, that anak has the right to transfer to anybody the property received. Okay? So take a look here. It is anybody because it should be transferred by any other person. It's called general power of appointment. So here we have here your property, and then we have a GPA to your anak. That property passing under your GPA is considered as part of your estate. Sir, why is it part of my estate? Because here, pinamana na kay anak. Tama? Pinamana na kay anak. Pero pwede niyang i-transfer kahit kanino. Tama? So in short, kay anak talaga yan. Kay anak talaga yan. Bahala siya kung kanino niya gustong ibigay. Okay? It's up to anak to whoever he wants to transfer that particular property. It's up to anak to whomever he wants to transfer that particular property. Okay? As compared to a special power of appointment. So we have here prior decedent, tatay. New decedent, anak. And then in your special or your special power of appointment, here under the will, anak has the right to transfer to a specific person. For example, D. Okay, that specific person is D. Here, take note, namatay na siya, hindi niya pa natatransfer. Okay? Namatay na siya, hindi mo niya pa natatransfer. Kanino yan? Sa kanya. So we include it. Clear? Property passing under GPA. What is the GPA? General power of appointment. We have a prior decedent. It has a will that the new decedent, yung kamamatay lang, pwede niyang ibigay kahit kanino yung property. So kung hindi pa yan na ibibigay ni new decedent, yung property na yan is still part of the gross estate. Kaya nga siya, additions to gross estate. But if that is a special power of appointment, for example, we have your previous decedent, the testator, tatay, and the new decedent, which is the anak. And under the will of the previous decedent, anak has the right to transfer to a specific person only, which is D. So in short, kanino yung property na yan? Kay new decedent ba o kay D? Kay D talaga. Kasi nga, kumbaga, binigay lang ni prior decedent kay new decedent yan, pero eventually, kay D naman talaga yan. So if ever it is a special power of appointment, do not add. But under GPA, you add kasi eventually, sa kanya naman talaga yan. Pero sa SPA, hindi naman talaga sa kanya yan. Para sa ibang tao yan. Para kay D. Nasundan yung GPA? Okay. Additions to gross estate. So these are different inclusions which cannot be actually determinable to be included. So of course, your real property, you know you include that. The personal property, you know you include that. But these items, you need to determine whether you should include them or not. So one is your property passing under GPA. GPA is a will or deed in which it designates a decedent to transfer a particular property from a prior decedent. So we have here a decedent and a prior decedent. Take note, if that is GPA, you add it. If it's SPA, do not add it. Next, additions to gross estate is your proceeds of life insurance. So proceeds of life insurance policy taken by a decedent upon his life and received by the following. Okay, so the decedent insured his life. Okay, so may life insurance daw the decedent. Okay, so if merong life insurance si decedent, tas binigay dito kay revocable beneficiary, included. Okay, so when to include? If it is received by the following revocable beneficiary, you already know anything that can be revocable should be included. Okay? Kanina, di ba, sabi natin, all revocable transfers. So anything that can be revocable should be included. So revocable, the beneficiary, life insurance, we include that. Okay. So for example, D, siya yung namatay. So D is the person who died and he has a life insurance. The beneficiary is X, the spouse, yung asawa niya. However, it is revocable. If it's revocable, include in gross estate. If irrevocable, do not include. Clear? Okay. Next, if ever the beneficiary is the state, of course, if the beneficiary is the state, it is now part of the estate. So part of gross estate include still. Okay? If the beneficiary is the state, in short, it will be included in the gross estate. So part. Next, its executor or administrator shall form part of the taxable gross estate. So if ever its executor or administrator, so D died and he has a life insurance and the beneficiary is the executor, you would still add it to your gross estate. So what proceeds of life insurance to include? The revocable beneficiary, if it is revocable, if ever your beneficiary is the state or your beneficiary is the executor or administrator. How about the life insurance, which should be excluded? So what life insurance should be excluded? First, when it is irrevocable. You already know that because if it's revocable, then it is included. Therefore, if irrevocable, it is excluded. Next, if the life insurance is from SSS or GSIS. If the life insurance is from SSS or GSIS, do not include it. Are we clear here? If the life insurance of the beneficiary comes from SSS or GSIS, do not include. And lastly, if it is from group insurance with heir as a beneficiary. If that is a group insurance and one of the heir is a beneficiary. You already know who is an heir. So when we say it is a group insurance, it is composed of one or it is composed of two or more. It is composed of two or more uh, insured. Two or more insured. So who is that insured? For example, the decedent and the heir, sila yung insured. So that is a group insurance. If it's part of group insurance with heir as beneficiary. Again, proceeds of life insurance when to include if the beneficiary is revocable. Anytime you can revoke it, therefore it can revert back to the estate. That's why. Another, if ever the beneficiary is the estate, of course, if the beneficiary is the estate, you should include it already in the estate. Next, if the beneficiary is the executor or administrator. Exceptions to this rule when it is irrevocable, when the amount received is from the SSS and GSIS, and if that is a group insurance with heir as the beneficiary. Next, transfers for insufficient consideration. So if disposed for less than is adequate and full consideration, then we should add it. Transfer for insufficient consideration. So what happens here is that there is a transfer in contemplation of death, but for insufficient consideration. So for example, the decedent has the following transfers. Okay, at the time of transfer, FMV and then amount of transfer. So he transferred a car. The FMV is 900,000. He only transferred for 80,000. A jewelry, which is worth 90,000, he transferred for 85,000. A house and lot, which is worth 1.9 million, you transferred it only for 500,000. Okay. So less than its adequate and full consideration. So you just compare it to your fair market value versus the amount transferred. If the difference is material, it is based on your judgment, then it is transfer for insufficient consideration. So the amount transfer is 80,000, the FMV is 900,000. Insufficient? Yes, insufficient. The amount transferred is 85, but the fair market value is 90. The difference is only 5,000, so this is considered immaterial. So this is sufficient. So insufficient yung car. How about house and lot? The fair market value is 1.9 and the amount is 500,000. Is it sufficient? It is insufficient because the difference is 1.4, that is material, so insufficient siya. Okay, so how much should you include or at what amount? Okay, remember the valuation, you get the fair market value at time of debt less the consideration. Okay. So this is the fair market value at the time of transfer. So get the fair market value at the time of debt. Let's say the fair market value at the time of debt is 870. So 870 less the amount of consideration, 80. The amount to be included in your gross estate is 790,000. Okay? That's how we compute for your transfers for insufficient consideration if it is transferred less than its adequate and full consideration. Sir, what if I transferred fair market value is 900,000 and zero? Eh, the whole fair market value should be included. Ganun lang naman. Okay? So if it's less than, what do? We deduct whatever is the consideration previously received. But if there's no consideration at all, the whole fair market value should be included. Next addition to gross estate is your claims against insolvent persons. So who is an insolvent person? Of course, a person who is unable to pay his liability. So this refers to receivables left by decedent, but the court consequently found the related debtor insolvent. So in short, we cannot collect from that particular debtor. Okay, so you should add it on your gross estate. However, it is also included as part of your ordinary deduction. So first, add it on your gross estate. Remember this one. Add as part of gross estate and you add it as part of your deduction. So it's added and consequently deducted. So for example, you have e-claims or receivables. You add it here. And then on your ordinary deductions, you have your claims against insolvent persons. You deduct it here. That's how we will treat it. But still, you should add it. So although you cannot collect it, guys, you should add it. Remember that. Although you cannot collect it, you add it in your gross estate. And then lastly, we have your amounts received under RA 4917. So what is RA 4917? That is an act providing retirement benefits of employees of private firms shall not be subject to any tax whatsoever. So you should not subject it to tax, but we should add it. So what is the treatment? You add it as part of your gross estate, but at the same time, deduct it as part of your ordinary deduction. So the same. So you add it in your gross estate, less ordinary deductions. You add it also on your ordinary deductions. So it will be, the net effect is still zero. Why? Because again, under this rule 4917, if ever you have a retirement benefit coming from your private firms, it should not be subject to any tax. It should not be subject to any tax. Okay, so what are the additions that we have discussed? First, we have your decedent's interest accrued at the date of death. Remember that your decedent's interest at the date of death, any accrual, be that dividend, be that partnership profit, we include. Another, a transfer in contemplation of death, any transfers in contemplation of death because it is in pursuant of death should be included in your gross estate. Another, your revocable transfers, any transfers that is considered revocable should be included as part of your gross estate. Another, your property passing under GPA. If it's under GPA added, SPA do not add. Another, life insurance, if ever the beneficiary is revocable, or the beneficiary is the state, or the beneficiary is the administrator or executor. Again, when do you include the life insurance? If the beneficiary is revocable, if the beneficiary is the state, and if the beneficiary is the executor or administrator. When do you exclude it? If ever the beneficiary is irrevocable, if the amount comes from your SSS or GSIS, or it is from a group insurance wherein the beneficiary is one of the heirs. Another, we have your transfers for insufficient consideration. So what do we do here? If ever less than consideration, we get the fair market value at the time of the debt less the consideration. But if there's no consideration at all, the amount at the time of the debt, the fair market value. Next, we also talk about your claims against insolvent persons, wherein we should add it first on your gross estate. At the same time, we place it on your ordinary deductions. And lastly, your amount received under RA 4917. Just remember, guys, in your estate tax, what we need to determine is the gross estate. What should be included? So do not forget the 8 items that we have discussed. Aside from your general rule that if ever that is resident citizen, non-resident citizen, or resident alien, your global amount of estate. And for non-resident alien, only for Philippines, but subject to reciprocity. Okay? We should also know our exclusions. This will be discussed on our next session. And we should know our deductions, which is again part of our next session. Further, you should know how to value your inclusions on your gross estate. We have already discussed this one. Our general rule is the fair market value, but we have also specific rules for your real property, for your notes, loans, and bonds. Also for your gratuities, for your annuities, including any usufruct. Also for your shares of stock. Those are special rules. So for next meeting, our topic will be your exclusions on your gross estate and your deductions on your gross estate. That's it for this particular session.